If you donate to charity, but you're not able to itemize in order to get a tax deduction for those donations, this video is for you. So, retirement is a time to enjoy the fruits of our labors. But did you know that there is a little known strategy that can help retirees potentially optimize their benefits while making a positive impact on the world? It's called a Qualified Charitable Distribution, or QCD. Today, we're going to explore what QCDs are and how retirees can benefit from them. So you might be thinking, as I plan for my retirement, I want to make sure that I'm making the most of my savings, but I also want to give back to causes that are close to my heart. So I would like to get a deduction for those donations, but I don't normally donate enough in order to be able to itemize. Can I still get a deduction for those charitable donations? And the answer is absolutely, if you qualify. So qualified charitable distributions allow retirees that are at least 70 and a half years old or older to donate a portion of their IRA, their individual retirement account, directly to a qualified charity. This distribution counts toward the required minimum distribution, or RMD for short, but it's not considered taxable income. So let me break this down for you. So when you reach the ages of either 70 and a half, 72, 73, or 75, whichever, depending on your date of birth, on when you have to start taking out those required minimum distributions, the IRS is going to require you to do that. And those are going to come from, in this case, traditional IRAs. Those distributions are going to be subject to income tax. However, by making a qualified charitable distribution, you can actually satisfy that RMD while avoiding the tax liability of the distribution, or at least part of it. So how do you actually go about doing this? What are the steps involved? Let me ask you this. How do people normally contribute to charity if even when they have required minimum distributions coming out? Normally, they'll take their distributions either the beginning of the year, the end of the year, or they might take that out monthly, right? And then just simply write a check whenever the church or charity is needing that donation. And if they do it that way, they would still have to itemize in order to get that charitable deduction. And if they do it that way, they don't get a deduction for it because most of the time they don't have enough deductions in order to be able to itemize. So instead, if they have the company that holds their IRA, and this could be Charles Schwab, it could be Fidelity, it could be an insurance company, Vanguard, you name it, whoever, they'll send it directly to the charity and it'll be via a qualified charitable deduction. The amount of the donation does not even show up as income on the 1040. And so let me show you using my screen how that's going to look. All right, so if you're seeing this right here, what we're going to point at here is, let's say that your required minimum distribution is about $19,531 per year. It could be $20,000, $20,000, $15,000, doesn't matter what it is. In this case, it's roughly about $19,531. And in this case, let's say that this person, they give $5,000 to their local church every single year. They know they're going to do it. They do it every single year. And so it's like clockwork for them. The problem is that $5,000 is not enough for them to be able to itemize. And so they're like, how do we get a deduction for that? We used to be able to itemize and therefore we could, but now we've got our house paid off. There's a bunch of other things that they've done. So how do we get a deduction for that? When they do a qualified charitable deduction, what they're going to do is they're going to fill out a piece of paper. We've had somebody that has had 34 different charities they've given to. So we fill out 34 different qualified charitable deduction worksheets. We fill that out. They sign it. They hold on to that and they will take it into their accountant or their CPA when it's tax time so that they can get this deduction. Because when the IRS they send out the 1099, they don't know how much was given as a qualified charitable deduction. All they know is the taxable amount is not determined. So you'll see on your 1099, you'll see the gross distribution and the taxable distribution are the same. And so you might think, hey, wait a minute, I did a $5,000 qualified charitable deduction. Why don't I have my deduction yet? This isn't where it's deducted, not on the 1099. Where it's actually deducted is when you take that form into your CPA and it shows that you did a $5,000 deduction. This is what it's going to look like on your 1040. There's your total distribution still as 19,531, but over here on the taxable distribution, it has that $5,000 subtracted off already. So it doesn't even show up as taxable income on your 1040 because the taxable portion is now $5,000 less. So that's where it gets deducted. And so you might be thinking to yourself, that sounds great, but how can I assure it or ensure that my chosen charity qualifies for this QCD? And that's a great question. And it's pretty simple. To be eligible for a QCD, the charity just must be a qualified 501c3 organization. Most well known charities, religious organizations, educational institutions, medical research organizations, they all fall into this category. It is always a good idea to check with the charity itself to confirm the eligibility, but that's going to be a pretty standard thing. So, by utilizing qualified charitable deductions, retirees can reduce their taxable income, potentially lowering their overall tax burden. And this strategy can be especially beneficial for those who don't itemize deductions or have already reached their deduction limits. And so now, not only are you able to support causes that you care about, but you're also enjoying the tax advantages that come with it. It's a win situation. And so remember, as you plan for retirement, consider the power of qualified charitable distributions. Consult with your financial advisor to explore how this strategy can align with your financial goals and philanthropic aspirations. Retirement's a time to enjoy life and to make a difference. With qualified charitable distributions, you can do both. Start optimizing your retirement benefits while leaving a lasting impact on the causes that you hold dear. And if you want to start exploring how tax efficient strategies can potentially improve your retirement today and embark on a path towards a brighter retirement future, then download our complimentary white paper entitled, Are You Paying Too Much Tax in Retirement? It'll be a great resource to start understanding the impact of good tax efficient planning in retirement. Join us next week as we go over the next one.